Good evening. Welcome to the Owen James Report. Finance Minister Audley Shaw last night essentially outlined a two-pronged strategy to tackle Jamaica's gaping fiscal deficit and thus live up to the island's deal with the IMF, cut spending and shore up revenues in order to benefit from well-needed help from the multilaterals. However, analysts such as Vice President of Portfolio Management at First Global Financial Services, Dean MacDonald, say cutting spending may be the government's best bet.
I think we have more success looking at the expenditure side, but of course, government as the biggest spender in the economy. If they cut back, ultimately the economy also suffers.
Jamaica's medium-term prospects appear to depend on foreign direct investments of the ilk planned by the giant French container company CMA CGM, which plans a $100 million medium-term spend to upgrade Gordon Quay in order to take advantage of the expansion of the Panama Canal by 2015. Here's Transport Minister Mike Henry.
This is the third largest shipping company, and therefore they're recognizing that you need to invest in the movement of goods across the globe. I don't know that I can think of anything in a negative sense. I think the more the other countries fail, the more we should benefit by our position for trade continues. It's merely a matter of whether you grow by 10% or you grow by 1%. If we are growing by nothing, as we have been doing for all these years, then any capitalization on the transference of goods, which is where we are going to be able to do it.
The chairman of the Port Authority of Jamaica, Noel Hilton, says the French had choices, but that Jamaica's strategic location trumped other locations as shipping lines could realize multi-million-dollar savings using Jamaica.
A ship now costs probably $50,000, $60,000 a day, and if you save 2 days in travel time, that's 100,000. And if you're doing that all year, depending on the number of trips, you can imagine what the saving would be on just one trade. Now you will have savings on all the trades around the Caribbean.
Wall Street had its worst day since the 2008 financial crisis, with all three U.S. stock markets plunging between 5.6% to nearly 7% as investors reacted to the unprecedented downgrade of U.S. debt. The Dow Jones Industrial Index plunged 635 points, or 5.6%. The Nasdaq plunged 175, or 6.9%, and the S&P 500 lost 80 points, or 6.7%. On the commodities market, oil prices sank $5.57 a barrel to $81.31. In the meantime, investors rushed to gold as a safe haven, sending up prices by $61.40 to a record $1,713.21 an ounce. Back home, the main Jamaica stock market indices declined by 125 points, or 1/10%. There was evidence of profit-taking, particularly in 5 of the newly listed companies on the junior market. 30 stocks traded, with 9 advancing, 13 declining, and 8 holding firm. Winners included First Caribbean International Bank, Grace Kennedy, JMMB, NCB, Sagicor Life Jamaica, and Scotia Group. The losers included Capital and Credit, Caribbean Cement, Carreras, Hardware and Lumber, Scotia Investments, and Supreme Ventures. And that's the Owen James Report.